following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. This first day of the trading week, Monday, September the 8th. I had to think there a little bit. And not that I didn't write it many, many times over the past couple of days, and especially today as I was preparing my opening call. That's my daily service for my subscribers. I go through a very detailed account of what we're looking at, why we were expecting that in the QQQ series, the Power Trust series, there should still be a leg D to come. We're almost there. Haven't got there. We did get the NDX 100, which is the core, the root, has already made the D. I suspect that Dow's down 15 at 17,121. S&P's down 3, almost 4 at 2003. Yep. You've got the comp index up 13 at 45.96. Gold is down 10 at 12.56. I still don't see anything in gold. What we're looking at silver down 10 cents at 19.05. You got high grade copper up at 3.20. That's up 3.30. That's nice action in copper. Copper's holding pretty well. Crude oil is down again at 91. Whoa, this was way back in the 104s, 105s, and now it's at 91. Very good. Bonds are up 5.30 seconds at 125.07 and 730 seconds. No, that is TYZ. Oh, yeah, we're looking at the USD. So the USD, the December bonds at 138 and 1330 seconds, 1530 seconds. TYZ will be the, what is the TYZ, for goodness sake? TY, do I get the TYZ? TYZ 14. It's the 10-year Treasury note. The note. Now I look at the dollar TYX as the yield. Okay, so we look at TYX is, let me just check that out. TYX. Yep, the TYX is the 30-year T-bond yield. Very interesting. Little gap up there. And it's trading at 3.201. Made a peak. Hey, you're going to be watching this real closely over the next couple of days. I'll explain it all as we move along. And I just wanted to go to the dollar DXY. The dollar was in leg E, still in leg E. Very strong. MACD's good. Stochastics at 94%. You finally got your D. Got an E, actually. A, B, C, D. A, B, C, D. E. An E in the 120 minute. I think the dollar is real close to just a little bit of a digestive moment here. And that says, watch the gold. The gold contract, the December contract looks terrible. But the test, this is the arch formation. In my Chapman Wave CD, introducing the Chapman Wave methodology, CD book, available at TFNN. I discussed these arch formations. Now, what I anticipate in this particular formation is that gold right now, having gone below the 1258.00 round number low of the 4th of September at 8 in the morning, no, at 10 at night. Is that right? 10, yeah. Spiked up, hit that resistance level, that downtrend, what I call the down channel inside track repellent zone, and it got repelled twice, and now is gone underneath because it's at 1257.00. So that's a point below. This is the bar that really counts, because the bar that takes, just like you did over here, when you took out that left side low of 1261.90 in the 120-minute chart back at 4 o'clock on the 3rd of September. So that low, when it was taken out on the 4th, It went under and then bounced back into the arch formation. That's what you expect. Except, I didn't put that on. I'll show it in a short while. When in the Chapman wave formation, when the H's become larger and you take out the left side low, the most important one, in this case, the most important one was the one from 1263.10 back at noon on the 2nd. So every day you've had these bounces and failures, bounces with lower lows and lower highs. This is going to be really important because by tomorrow, it's a 120-minute bar. If by later today or tomorrow there has not been a rebound above 1258.00 in the December contract, gold contract, that'll be very negative. And then immediately I have no choice but to say, got to draw another channel. And that channel is going to go all the way from there, from the low of 3:15 in the afternoon on the 26th of August, where the low was 1281.10. It hits the low of the 2nd of September at 1263.10, and that's the channel line that I'm looking at, and it says, watch out, because extend to the right. Because that channel, if it gets taken out, that support level, and I'll show you exactly what I would do. I'd say get another one in there because this is the level that you've got to be watching very close. I'm going to raise it up a little bit, make it nice and wide. The inside track says, most importantly, 1251, that whole 1252 to 1249 area is absolutely imperative now in gold for it to hold. Okay, so let's get out of this. We're going to do a couple of other things here. I had a couple of questions, but first let me do this. Let me look at my notes, all those notes that I wrote from the weekend that I never look at. 139, was it 139? Yeah, 139 million. Let's see now. I'd say that 139 million, you remember, this is going on for a couple of years, quite a few years now. But I mentioned it just last week. I said, at any point, we're going to get the price of a house, a single house. Well, it might have little cottages on the grounds, on its multi-hundred acres, whatever. Well, there's now something in Florida that's for sale at 139 million. 139 million for a house, but that's nothing. As far as I'm concerned, what I'm looking for is something so exorbitant, so extraordinary, so devastatingly excessive that it just stands out as something that is on the lips of everyone. So I don't know what that price is. Who knows what that price is? But it is something so extraordinary that you turn around and you say, how could anyone even think of spending that kind of money? So we'll see. So far, it's the most expensive house, they say, that's for sale at this particular moment. Dan Yas says, I think Connecticut and a state was sold for 149 million. Yep, it could easily be. We're going to be watching this real closely. So that's the one thing. The other thing I want to look at is, I wrote it down here. Yes, I want you to look at a couple of things here. I wanted to show you, there's going to be a webinar coming up on Friday. I happen to consider, whenever I'm doing a webinar or a Master Trader series, I try to look out ahead and I say, where in my work are there either cycle dates or a left side, right side price time match? Where am I looking at for a really important moment where it's so pertinent to be able to do a Master Trader series based on the Chapman Wave methodology, where I can show chart patterns, not just the label of A, B, C, D that's so important in my work, but I can show something that gives veracity to and some robust analysis to the period that we're in and what kind of chart formations in my work says, looking out, over the next 6 to 8 weeks or maybe more, this is the pattern that you're going to be able to trade. And this is what we will study. And most of the time I get emails from attendees to my courses saying, wow, that was great because that's exactly what we're looking at, and it's really benefited us to be able to make some money. So in the QQQ series, what we're looking at, and I discussed this the other day, I discussed it a week ago, Wednesday, was it, or 2 Wednesdays ago, when I gave a talk here in the Boston area, and I said, this rising wedge formation, very often, and I spoke about it on air, looks to me, it's always like, I think of the Statue of Liberty, you got this rising wedge formation, and then there's a pullback, and it's like holding the torch, except it's like the cup. When you hold your hand out, you make a cup formation, and that cup formation says that from the wedge, you should get a pullback. I drew this in already a couple of days ago, and I said there should be a cup formation that takes you back to the top, and it either goes just about to, right on, or just over the previous high bar. And in this particular pattern, that is going to be the biggest clue that we can have of saying whether or not there's enough technical veracity, enough technical foundation to say that in this case the MACD is going to make an arch formation like an M, like a soft M. There's your left side, comes the right side. As one of the technical indicators, in this case the stochastic, both the stochastic on the RSI, that little red line going to gray, start to fail. And that says be careful because we're very close to some kind of a short-term topping formation in almost all the indices. Now I'm going to run this through, and during the next break I'll be able to pick up my CD and show you all the chart patterns that we'll be discussing and going into in great detail. And you will be studying the CD, you'll be studying the patterns. I'll send out a little compendium of the patterns, and what we're looking at here is right there at TFNN, front page of TFNN, says Master Trader Series with Basil Chapman. Full day, 8-hour online course taking place Friday, September the 12th. This coming Friday. There's not that much time. I would recommend that the sooner you sign up, the sooner we can check with you that you get all the material that you need. I want you to start studying that material, kind of get a head start, even though you'll have 30 days to archive this and go over the 8 hours as many times as you want. I want you to be able to ask me questions. You can ask me questions beforehand. I don't mind. I'm always around to answer them. So this is going to be really important. If you sign up now, you get my 1 month. You get 1 month free of my newsletter service, which helps you go through the chart patterns live as I do them every day. Every day I show my subscribers this. There's the Dow chart. There's the circle that I made right there that said I'll have to move a little bit to the right. It's because it's taking a little extra time, but it's not, the price is really what you want. Why? In the Chapman wave, you're looking for higher peaks, and those are what you count with the letters. And on the downside, uppercase gets capital letters, lowercase gets lowercase on the downside, just to show the trends. And in this particular instance, I even drew an oval pattern that says, in the Chapman wave stalk leg formation, you've got your leg, you've got your body. I'm anticipating the neck just sneaks above 17,161. And straight after that, we've got to be real careful because we could, in fact, start to see some kind of a retracement, even if it's just a consolidation back into the high 16,000s. It's still a consolidation. It's a start anyway, because we do need some kind of a breather. Now, what I do get a little concerned about is the speed with which we get those. The puts are bought, as on Friday, I think there were, it must have been just an extra bout of buying of puts. People got so nervous. I don't like the speed with which that happens, so we need a couple of false highs here that are just nominally higher to get those the bears very nervous, and then to get the bulls a little cocky, and then we'll see a pullback. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? An atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we're back, and we're looking at the QQQ series at 100.25. I'm expecting 100.35 to start leg D, and then we've got to be somewhat careful. That's the nature of the technique that I work with in the Chapman wave. And we're going to go through these different indexes in a moment. We're going straight to Mark in Denver first. Hi, Mark. How are you? Whoops. Mark, you there?
Yes, I'm here.
Hi.
Hello.
So you'd like to look at?
So I've been kind of looking to see what looks the most vulnerable after we get to these peak Ds and the XLF and the QQQs. Maybe we've already done it in the XLF and the SMHs. To me, it looks like the IWM is pretty vulnerable. It has not gotten back to its highs like the other indices have.
Correct.
And I'm wondering if you think that's the most negative of the major ETFs that we follow.
So, folks, we're looking at the IWM, which is the iShares Russell 2000 ETF. Now, I'm going to show this in 4 time frames here, just to be for you to get some sense. This is the 120-minute chart right here if you're looking at TFNN. If you're looking at, go to the front page. It's just fantastic. You just click on those three icons. Your computer, it'll recognize immediately what system you're using, and you'll be able to go to the live charts that we're showing here at TFNN immediately. In this case, I'm showing the left side is the daily, the middle one is the weekly, the right side is the monthly, and this one here, I'm going to put up for a few minutes, is the 120-minute chart. And you can see, I better have something to drink here. English breakfast tea does the trick. All right, here we go. You can see that there's a channel that's been held, broke it momentarily, but the IWM is trying to move gently to the upside, and it made a peak E in the Chapman wave at 100. I forgot to type that. 117.80. Let me just put it in now, so I don't have to keep looking it up. 117.80, and it's pulled back from there. It went on Friday all the way down to 115.17, 3.5 points, and now it's bounced very nicely at 116.56. But it's really the weekly chart that says it keeps making these patterns that want to test the 107s and then bounces back, nominal new high from 120.58 at peak D, goes to E at 120.97, pulls back, holds this time in the 109s, and bounces back to the 117 area. It's at 116.60 right now on the weekly chart, kind of a little above the middle of this most recent trading range. However, the technicals are still, at this moment, the technicals are still very weak. How will it strengthen? If it goes to 122, that's 6 points higher. That's a lot of points to make up based on the pattern that I'm looking at here, but it will turn the MACD positive, and in fact, it'll produce a very powerful move that says you're making higher highs and higher lows. At the moment, it's starting to make it made a slightly higher high, but the lows are making this 107 to 109 area really important to hold. But in the meantime, the monthly chart is really, I'm going to open this up. This is the monthly chart, has a rising wedge formation, and most importantly, let me just move this pink line right there and show, there it is. And what's most important, actually we could even think of it more as a channel, but it is really a rising wedge. And most importantly, it's had a high level consolidation for the past, I'd say since December at 115.97. It's really been in a trading range between 120 on the high side and 109, 107 on the downside. And most importantly, it's making this oval pattern that says that was a peak F. It could have recycled. But if for any reason in September, and we don't know for sure, because I'm going to talk about some other things as we move along today, but most importantly, this monthly chart is saying that the MACD is pulled back and it's negative, but the beta, the distance between the 9-period moving average differential, the green line and the red line, is very narrow. And most of the time, what happens when you get that, a flat MACD says you maintain the direction of the last indicator. And in this case, I've got a peak F, but the IWM on the monthly chart is not closed decisively under the 9-period exponential moving average. So I can't put a down arrow in. I can just say there's a high-level consolidation going on. The stochastic is weak. The unbalanced volume is good. The relative strength is weak. There's a real good chance, and I can just say that if certain things happen, then I can extrapolate other data and say that this is the projection that I would have. So I don't want to jump in to the weak, we've got a break coming up, into the weakest of the indices at this particular point and just go ahead and short it. So let me explain if you can hold on, I'd like to get into a little bit more detail. We'll look at the IWM when we get back with Mark in Denver. Basil Chapman, Tiger Technicians Hour, Dow's down 11. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're on with Mark in Denver. We're looking at IWM. That's the Russell 2000 ETF. And let me tell you something. It definitely is one of the weaker of the indices. It has not gone to all-time highs over the last, well, it did that back in July, I think it was. Was that June or July? 4th of July, and 4th of July, surely there's no trading, the week of the 4th of July. And it's made a cup formation. It's making a second cup formation, not with the same strength It will have the same strength if, in fact, it starts to trade at 118.62, about another point or two higher, because the MACD will turn positive and the stochastic will push maybe into the 68-75 percent area, and that'll be good. So now, this is what I'm going to make. I'm going to make this suggestion. I would hold off just a little bit. I'd hold off for another day. I'd wait. I'd have the patience to see, although the NDX has done it, I'd wait for the Qs. Maybe it does it by the end of the day. I want to see the Qs in leg D before I decide on. We already have a shortened, one of the indices, a starter position. Before I'm adding to this at all, I want to see what's going to happen, whether or not the Qs close at the high and have a good session tomorrow, or whether they make the leg D today or tomorrow, and then the same bar that makes D cannot close above 100.34 as the MACD starts to turn negative and the stochastic slides. So here's my suggestion. I know that you follow this. Would you be using options, or would you use the TZA, or what would you do?
I'd probably go out a month on some IWM put.
Yeah, okay. That's the way I tell you what I'd be thinking. I'd have a little patience, because you're using options, and a point either way is not going to make that. Well, it depends, of course, on what strike. Are you going to get in the money strike, out the money strike?
Yeah. See, what I was thinking is maybe it can make it up to a daily F, and I was thinking of maybe getting the 118s.
Oh, okay. So let me go back here. The daily F. So you're looking for the double, that same kind of U-shaped pattern double top that it's had in the weekly chart before, and it's done in the daily chart a couple of times. Well, here's what I'm looking at. If it goes to another high, and I don't want to throw a kind of a loop into this whole thing, but those weekly charts of the QQQ series, the Dow, in fact, I'll do that right now. Let's take this moment right now. If you're looking at the weekly charts, the weekly technicals on the Dow, the S&P, SPX.X, folks, if you're looking at Tiger TV, it's the one right here in the middle, SPX.X. It's this one right here. Look at that. The S&P stochastics at 93%, but the MACD is not confirming the most recent high. In the Dow, you've got, in fact, it's very interesting, you've got pretty much the same thing, except that if there is strength this week and the Dow is able to get under, I don't care what the circumstances are, for whatever reason, if the Dow even touches 17,300, that MACD in the weekly chart is going to improve. And then all of a sudden I'm looking at something and I'm saying, hey, wait a minute, this is very interesting. Why? Because I've got an alternate count in the weekly chart of the Dow of a G, which could be very negative, and an A, which is the diametrically opposed. In fact, it's even more positive than the negative of a G, because it says you're going to go for weeks, months, in fact, to the upside. If this is an A, you're going to have to still go B, C, D. That could take you into October. So I'm watching this really closely. That's why there's a little hesitancy here in my voice. If I look at the IYC, a very good gauge of what strength there is, that is very good. The IYC is, in fact, the iShares US Consumer Cyclical Index, Consumer Services Index. And it might be making a doji, we don't know, in the weekly chart. But, boy, the technicals in the weekly are still very strong. So I don't want to get ahead, too far ahead, in looking at the negative side. I want to say, what would complete the upside in the shorter term, the daily, that if there's a sell-off, it isn't just a mild sell-off, it becomes a much more serious sell-off. And what would I be looking at in technical terms? If I look at I'm going to include the NYA.X, the New York Stock Exchange, 1,860 or something stocks like that. Now, it's made a peak D. Today, it's not acting all that well. So the day's young, but the MACD is still good. The stochastic's still at 84%, but turning down. And the weekly chart is the one. And this is the reason why I'm prepared to start short positions, because the larger index like the New York Stock Exchange and to a certain extent the S&P, which is 500 stocks, are saying the weekly charts there are a little bit more vulnerable to the daily pulling back sharply and then impacting negatively the weekly. In the IWM, there's not that much to say because the price hasn't even come close. At 116, you've got 4 points to go before it even starts to tackle the previous 120.97 high. So this is just a matter of timing. And once again, you'd have to be looking at the risk reward. So I think in a sense, having patience is worth it. It means, well, what I was going to suggest is starting a small position right here because you're looking out at October or November, October probably or November?
October.
October. So if you're looking at October, you'll get a lot of information over the next, I'd say 2 to 3 sessions about the IWM in particular. Okay. And if you've already got the position, it means that if there is a failure, and if anything's going to fail, it should be the IWM because it's one of the weaker indices, and it should fail and it should suddenly be, instead of 116.40, you should suddenly see it at 115.70 or 115.50, and that'll say, aha, there's that H pattern in the daily. It's probably not going to get even close to the high of even 117.80 made on the 3rd of September. And that way you're in the position, and it gives you time to say, okay, it's not working because, in fact, you're at 117.35. I don't have to get too carried away. I can have patience. But this way, it means that you've already set up something, even a starter position, that says, I'm now in the position if there is a failure in the next day and a half, because my suspicion, based on a whole bunch of timing issues, is that if there is going to be a turn to the downside, it's going to happen within the next few days and it's going to be sudden. But if there is a turn to the downside, it's not going to be one of those things that open the S&P and the Dow and the NASDAQ futures opening sharply lower and then turning up by the end of the day. It's going to be opening lower and closing at the low with very sharp pullback, not giving anybody a chance to get back in. All those people that had to cover over the last Friday afternoon and today because there was some strength won't believe it. They're just going to think, I'm done. I'm not. And that'll be the one that really works, and you get, out of 3 or 4 sessions, you'll get at least 2 that are triple-digit down. That's if it's going to work, and that's the only way I can see it right now as working, if it's speed that works to the downside. That's why I'm just saying, kind of get a little position, because if it does work, it's going to be real quick.
Okay. Great.
And then I think your strategy of having patience would say between 117.20, you might not get 117.80 out of it, but 116.60 to 117.20, that's kind of be the area that I'd be looking at if there is strength later today and into tomorrow to make that leg D in the QQQ series.
Okay, thanks.
Thank you for calling. Good question, and I think that would be a good plan. So I hope it helps you. Thank you, Mark. Mark in Denver. Now, I had a question about Google. I'm going to go to GOOG instead of the GOOGL that I was asked about in the email, if you don't mind. They have, let me just double check. They have exactly the same patterns. So I'm going to Google because I've got that already notated. I have the other one notated, but not currently. So what I'm looking at here is that Google is trading at 590.50. It's up 4.42. Now, I can't even remember the question. Give me 1 second. Question was Google. Basil, good morning. I'm holding a weekly call for GOOGL that's up 400%, that expires on Friday. Would you hold here or sell? Thanks. I will listen to the show. Okay, good. So you know what I'm going to suggest? Based on my 120-minute chart, I've got this as leg E, probably peak E as we speak, but the last E went to an F and then a G. Everything about this chart says very good action, but it's becoming quite overbought. We're looking at another 4.5 sessions, more than 4.5 sessions, because today's not even a half session yet. I don't want to get you out. Did you say a call, a weekly call? I don't know if you've got more than one. If you've got more than one, I'm going to suggest right here, you've got a fantastic gain. I'd take my profits on the one, and I'd wait for leg D in the daily. And then leg D, I would just handle that by raising the stop. You're busy following it, I know closely. As it's going up, I'd use the 120-minute chart. If it's recycled, this is E/B. number one. No, sorry. If it's recycled, this is E/A, and you should get a whole B to C to D out of it. It is, at this particular point, one of the leading stocks. Google is trading underneath its all-time high. And that all-time high, this is almost the same situation as the IWM in a way. 614.44 is trading at 590. So that's 640. It's got another 17, or whatever, am I missing it? 25 points to go. Is that correct? Yeah. And I don't know if it's going to make that, but I can tell you this, that if Google gets over 599.65, which was peak B, that'll be leg C. And that says, Google can go all the way towards the 614.44 level, but my eye says that there's a good chance that it's going to fail under 614.44, at least for some time. It could be a week and a half, it could be just a quick pullback, but it's not going to go into a straight line to that level based on the way the MACD and the stochastic is trading. So if you've got only one, I shouldn't say only one because that's great that you got 400% and it's up huge at this particular point, I'd get that peak C, wait for a pullback, have patience, and then as it goes 1 penny above whatever peak C is, let's just say it's today's high, 591.77, and tomorrow it pulls back and the next day it goes to 591.78. As it goes above that, I'd make the real tightest stop of maybe 2 points and a trading stop and let it go. And I'm afraid I would be getting out of D, even if on Friday this thing trades at 650. It doesn't matter. That's the trade because leg D is where you want to start taking profits. That's the way I'd be looking at it. However, here's the thing. If you've got more than one call, then I'm going to suggest take one off right here. And you could even put it back somewhere between 589 and 588, expecting that leg D will occur. And that one, the moment it goes to leg D, I'd take that one off and leave the other one for Wednesday or something and see if you can keep riding it higher towards Friday. I'm not sure this is going to run all the way into Friday, but that's the way I'd be looking at it. Hope that helps you. So, first of all, congratulations. Fantastic trade. 400% trade on a call on Google. Nice job. Nice job indeed. So, okay. Now, Microsoft mentioned in the den. I'm not sure what was mentioned in the den, but it's trading right now at 46.43. This is leg D. Beautiful cup formation, broke out of it, and in the cup formation, this is actually what we call in my work, and we're going to be studying all these charts. This is called the cup. This is really a cup and handle, but the breakout is really a cup and a cup and ladle instead of a cup and handle pattern, Chapman wave cup and ladle. And that ladle pattern says you should go to a D or an E. And we're at a D. So that says that Microsoft has had a fabulous move. It is getting a little bit toppy. I don't have any sign yet of a top. The 120-minute chart has gone to A, 45.21. Yep, A, B, C. It's in leg C, maybe peak C. It should go a little higher than this, above 46.80. Should go to, I think, 46.95-ish area. But there's nothing wrong with the weekly, and there's nothing wrong with the monthly in leg F. Could have recycles as well. Now, this is so fascinating. Why? Because look at Microsoft. It was just dead for years. It was one of the absolute leaders. Look at this chart. I'm squeezing it. I'm going all the way back to its 53.97 high. When? December of 2099. It did not participate. I remember this well. Now it's coming back to me. I didn't remember it before, but now it's coming back to me. It did not participate in the huge move up from January, February, and into the March high in the NASDAQ and the S&P. It failed. And that was a tip-off to me that when the next big move down came in the NASDAQ, as I said before, it was in the April newsletter of my market line that I said to my institutional clients, I said, this high that's being made in the QQQ series will be a high that I will never see again in my lifetime. It's 15 years, right? We'll see, 14 years. We'll see. Well, Microsoft is looking like it really wants to get back to the 53.97 level. It's at 46.42 right now. But look at that base. Look at that huge base. This is like the gold base. I wonder if I can find it. I wonder if I can do it right here at GC. Look at this base. Talk about base. Oh, I don't have it. Oh, they don't go back. I don't know what it is with these guys with the indices. I used to have this going way, way back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi folks, Basil Chapman. So this is what we're going to be doing in my webinar coming up on Friday. This is probably, I'm hoping to make it the most succinct the most informative and looking out, the one that gives chart patterns and ideas for trading that is really pertinent to your own veracity, to the skill that you want to develop as a technical analyst. And look, in this particular chart, this is from my CD introducing the Chapman Wave methodology. Identify the trend and then trade with the trend. We try to do that as much as possible in my opening call. It doesn't always work, but this is kind of what we did today. We just picked up a stock, a low-price stock. Doesn't mean to say it's cheap. It's just a low-price stock. We've had great success before. We didn't have success this last time, but I'm getting back into it because I think it's a seasonal trend that I think I've identified the right moment. We'll know right now it's up from our entry point. We'll see what happens. But we want to try to trade the trend. And I see the trend right now, at least in the short term, as potentially changing from up to sideways to down. Why do I say sideways? Because it depends on your time frame. If you're talking about in intermediate term, we might just go into a trading range here as we have yet another rotational correction. But I'm going to explain to you what I'm looking at here. You see this chart? Doesn't it look wrong to see the arrow going down when the price is going up? Doesn't it look wrong to see the arrow going up when the price is going down? That means if you're a short-term trader, sure, you can short on the way up. Look, there were many peaks, and you learn how to count those peaks, but those peaks can be shorted. But if you're in the trade for more of an intermediate term position, we have one particular stock that we've got as, I'm hoping it's an intermediate term position, but I think we're going to be having to raise the stop in another day or two because it's just at all-time highs right now. It's doing very well. But hey, we'll see what happens. But in the meantime, you want to be trading the major trend. Doesn't that look correct? The arrow's going up, the price is going up. You got your higher peaks, meaning A, B, C, D, E, F, and even a G. And on the way down, it doesn't look right that you'd be shorting rather than buying. You could buy, it's fine, but the major trend was down. And how can you get help? I'll explain how you can use the MACD, the moving average convergence divergence, how the different 9-period moving average differential can keep you in a trade for quite a while. And look at this, the stochastic, how you can use the stochastic. What does it mean when it's over 80%? What does it mean when it's under 20%? How can you trade that? Time difference doesn't make a difference what time frame you're looking at. The process works exactly the same. So the trend is your friend is an old Wall Street axiom that really goes to the core of surfing the Chapman Wave methodology. We're going to be looking at that. We're going to be looking at the kind of patterns like the arch formation or channel lines. And the arch formation says, in this particular instance, what we're looking at is when we are looking at a rounding top. Let me just go to chapter 13 here, chapter 13 right there. When you're looking at, and that's what we're going to be looking at, a lot of these are forming arch formations. There's a midpoint, a plumb line that you can look at that says we've moved to the way up, and we're making some kind of a turn to the way down. What can we be looking at, and what kind of time frames would we be looking at in terms of how many bars went up and how many bars go down? How can you use trend lines as support levels or resistance levels? How can you use the MACD and stochastic at the same time? So it's going to be, to me, it's going to be one of the most important time-wise webinars that I've done. 8 hours. Go to the front page of TFNN. Here's the information right there. You just go there, click it on, and I expect everyone to have the CD introducing the Chapman Wave methodology. It's very important that you can use that. So you'll be calling us, and we'll talk to you about it. Meantime, these are the most important things that you can be looking at in terms of the time frames, because the dailies are saying we're close to some kind of a short-term top here. I'll be back tomorrow. Stay tuned for Larry Pesavento, and it should be a great show with Larry and all the other hosts this afternoon. I'll be back. Speak to you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.